Hello everyone, welcome to another weekly market review. Today is the 18th of May 2020. Our plans from last week are on their way to manifestation. Let's have a closer look at how we will plan our execution. So here's the total market cap chart. This is the same chart from last week, and what we had thought about is that if prices to find support at this yearly pivot, yearly VWAP level, then we could possibly show some kind of a continuation before we get a bigger correction. So we haven't exactly gotten a continuation yet, and this 265 weekly level that we are currently at, it is showing a third possible rejection from here. But what I want to show you is that if this level that we are at, which is currently acting as resistance, if we can break through it and successfully test it as support, like we did have it as support over here, then there is a potential to head towards this 290 level. But until then, this is still strong resistance until it's proven otherwise. You can see that this structure, after having such a big move, it still looks like it is not fully done reflecting and showing itself, and it is not having that structural strength to bounce off and make a very big move. I think even if it does go up, it can be a sort of bull trap, so but you do look for the fact that this level where we are at, which is resistance, it needs to turn into support, to move to the next level of resistance that we have. Until then, this can very well just be reflecting the overly bullish sentiment of the market and trying to trap them. But nonetheless, guys, the thing is that we've made a move from almost 100 billion to 270 billion, and we have made a very shallow retrace. So in a longer term time frame, if we try to understand that this does have the makings of a potential reversal for this entire consolidation. Also, in terms of levels, another thing I wanted to point out was we were looking at how strong levels would be, and I did say that this lower level around 180, it does have a lot of consolidations that have happened, so it was pretty bullish if price can consolidate here. But in terms of higher levels, this level as well, this 225 level, which has the yearly pivot and the yearly VWAP, this also acted as decent support before price was breaking down, and it is very close to where price was in the previous distributions, so this is still, I think, a very strong level. And if BTC is very bullish and we are not to get those much lower levels, then it makes sense for this entire consolidation to build a structure with support at this level. So for now, what I would say is I would still favor another retest of it to build some good structure to make a move higher. But if it does have to go higher, I am not so excited about the way this structure is shaped. And also, if you do use any kind of mean reversion strategies, you will see that they are reflecting that potential for the mean reversion to take place and for price to come back and test the levels which have, at least for the first time, been proven as support. So for now, if this 265 level, it can be tested from the upside as support and successfully tested, I would be looking for further upside. But this looks like a place to be cautious because of the kind of move and the kind of structure we have built after that, and also the overly bullish sentiment. You would see a few bears that may have turned by now. So structurally, I would still exercise caution. Technically, after such a big move, the kind of consolidation we're making, this is looking a lot like a high time frame reversal. Until it proves itself, I think if we break this, then we would be looking for something else. But if price does end up coming back down and successfully retesting this level as support, that would make me quite bullish, guys, because this is phenomenal to have this kind of a move and a shallow retrace like this of this move. I mean, this just shows that this is actually what reversals would be made of. But we still need confirmation. This structure which price is building right now, it's looking incomplete, so it still needs to build out before we can make a stronger bet on this market. So still waiting for all of that to play out, and exercising caution at these levels with this kind of structure. Here's another very important pair and an interesting pair that we do track regularly, and this is the total versus Dow. Versus the Dow Jones is basically crypto versus traditional markets. And you can see that we made one big impulse, reclaimed a level. We made another big impulse, and we've reclaimed this 9 million level. So this 9 million level on total pound Dow is very, very big. Unlike what we see against the dollar, you can see that this level, it provided support here and it provided support here before the distribution. So this is a very big level, and price has held the first retest of it. So technically, even though the dollar chart looks a bit different, but against the Dow, I think this is a very significant reclaim. And if there is to come a second retest and hold, technically this looks much cleaner and much better than the total chart in terms of the kind of level that it has reclaimed price, and the kind of level that it wants to turn into a high time frame support. So a second retest of this would build a very good structure for the upside over here. I'm going to be watching this ratio quite carefully, but just in terms of structure, this does look cleaner, and this level over here looks much more significant on this chart than it does on the total chart. Here's another significant chart when it comes to the total market cap, and this is its fractal with the Amazon. And essentially what we are looking at is the dot-com bubble and the consolidation that took place after, and then the reversal impulse after the 2008-2009 crash. So you can see that it is quite accurate in terms of, first of all, its context. That we had a big run up to this bubble and we had a huge crash. It's the same with crypto. We had a really big run up and a huge crash, and the consolidation structure also has a lot of similarities. People are talking about this crash looking a bit differently, this one over here, because this did not make new lows. And in crypto, the total market cap, we did end up making new lows. But if you look structurally and in terms of volatility and how crypto is, and essentially what actually happened that day, with over leverage and the amount of liquidations we had on BitMEX, essentially that is more what caused this wick. But if you look at the structure, it is very beautiful. It is quite accurate, and it is also depicting something very similar. It's a new technology, it's a new use case, and it's a brand new asset class which has attracted a lot of attention. And over the last 2 to 3 years, it has also built up a lot of robustness. So I think essentially what this movement, like I said before, it is reflecting a potential reversal. And if it is, this is a decent probability, like what we are seeing. Maybe we don't have any data to support a run up that follows after this, but what we do have is a fractal, not only in terms of price but also in terms of the shape, the sentiment, and the kind of asset class, the kind of technology. This is what fractals are made out of. This situation, it happened 10 years ago right here, but it is so similar to a lot of things that are happening. This 2007-8 crash, I mean, it was a big financial crisis, and the world is currently facing something similar, so the people that were coming out of that, they would be in a very similar mindset when price would be here, in absolute fear. Nobody is thinking that this is what is going to follow suit. This is how bull markets are born, out of a lot of skepticism and cynicism. So uh, technically also, guys, like, I mean, you have to understand 2.5x move for an entire asset class, which such a shallow retrace, like, look at what it's reflecting. But also, with along with the fractal, it is reflecting a call for building some kind of structure. If we would zoom in, this bit of sideways grind would reflect that price is building out a structure. So if the market is in confluence with what we are trying to think of in the previous analysis, this fractal is adding to that confluence of a possibility of building out a structure. If these levels are to hold, if this 220 215 level on the total market cap is to hold, there is a potential to build a similar kind of structure and then move out of this with another impulse. So we're looking at BTC. This is the volume index on BTC, and we're looking at the OBV, the on balance volume, right here. And you can see how bullish this actually is. I think a lot of people are not looking at the OBV right now, but the on balance volume is reflecting genuine demand. Like, this move up has reflected genuine demand. We basically making a SR flip onto previous level, and essentially you can see every time the market is the OVB is moving up along with price very healthily, it reflects a very strong market, and that gives a lot of weightage to this being that potential reversal that we are looking at. But for now, if you look at the most recent volume action, you can see that it has started to decline, which again reflects that it is a potential consolidation while volume is declining, and price is making its move. So if you actually do want to see this look healthy, then we should have a strong volume spike and a support resistance level, which is previously big resistance. Essentially, either this the levels between this quarterly and this monthly, I think we have a very significant amount of resistance here. So you want to see that being flipped as support. You want to see this volume really taking off, and then we can say that, okay, the price is too bullish for even such a major resistance, and even with after having such a big move, and not having enough structure. If price can do that, then yes, I would be ready to flip immediately. But again, this is reflecting possible consolidation, so looking for the same things on BTC right here below, like we did signify last time, that we have a lot of confluence of supports over here. There's multiple moving averages here. There is the 200 DMA, there is the 100, 200, 300 EMAs on the daily, there's the 55 EMA on the weekly. All of these moving averages, these dynamic support levels are at these very close to all these levels that we have, these are actually the volume levels. The anchored VWAP and the yearly VWAP, these are dynamic support and resistance levels as well, and like I did mention before, that these are very, very significant, even in traditional markets, and the more and more institutional players that are coming in. You can see this week we had big volume rise in the CME options, so you can see that big money is wanting to play these markets now. There is enough liquidity in them, and they are products where they feel secure in trading this kind of volatility. So you should expect these anchored VWAP and VWAP levels to start being really respected. So there is a lot of confluence of support here, guys. I would not want to be looking at levels below until this yearly VWAP 7680 level is taken out, So for now, the same plan stands. Wait for price to reflect what it has to do. Essentially, this is a very big level, and until this is turned into support, or we visit these levels here, I mean, you can trade some lower time frames, but if we are planning for a swing position, we would want either of these levels to be retested. If price is too bullish, it is possible that we come down and even hold this 85 8600 levels. If price ends up doing that, again, it is significant and reflecting that this structure is healthy and it is strong enough to move up again. And so we have more confluence, adding substance to our bias that this is potentially what is the first leg of a high time frame reversal in cryptocurrencies, and we have volume supporting it. And for now, we have this plan of allowing price to come back and reach our points of interest so that we can make the execution. So let's look at odds against BTC. We have been looking at this before, and we were mentioning last week there is potential for a bounce play over here, and we did get a few bounces in multiple odds, about 4-5% moves here. So on lower time frames, you can manage your risk. Apart from that, you do know this support level is getting tested a lot. So even though it is valid as long as it holds, so it is a very valid level to be managing risk for upside. But we do know that the more this gets tested, the likelihood of it breaking increases. And I would say that if this does have to break, I mean, it can happen with BTC moving in either direction. Violence in BTC can end up breaking this big support level and creating more disruptions again with large gaps against BTC. So keep a lookout for that. I think for now this play may be exhausted. We have had a few decent bounces in odds against BTC over the last week. There's few mid caps and small caps like Zelica, and also we had mentioned data on the Subverto YouTube. There was a couple of other odds against BTC that are doing well. ZRX did really well. So individual plays are opening up again against BTC in this market, but you do need to remain cautious as the overall picture is currently just a long support, high time frame support being tested multiple times. So do remain cautious. You can use this still as a place to manage risk, but do know that we have tested it 5 to 6 times. If it continues to hold support, we do break some higher levels, it is possible to look for continuation. But for now, do understand any high time frame and any impulsive move in BTC, regardless of direction, can damage this pair. So do be mindful of that. So we're looking at Dow Gold to gauge our risk on and risk off behavior, and you can see that we made a lower low, a lower high and a lower low on the daily time frame. We did break the low that made the high, so the daily market structure is no longer bullish. We did build a sideways consolidation in this structure for more than a month. We did close the daily below this, so essentially this is reflecting that it is the market is leaning more towards risk off. We have had a few emerging markets showing much more weakness than the Fed pumped American market. So we do know that the global macro picture has been much more bleak than what the American indices have been pushing. But nonetheless, this is a very significant metric and a very significant chart. It is showing that we have shifted in market structure on the daily time frame. We have on the daily time frame confirmed a break of a sideways consolidation. So this is the time to be very cautious. If you are still aggressively risk on, I suggest that you do at least have taken profits and start to look for structure and start to look for price to build structure to um, you know to build some kind of a corrective structure. And this is quite clean. You can see that um, on Friday we did end up making a decent close below this. So very telling and quite significant. I think until we start reclaiming this 14 level on Dow Gold and price starts showing that this is just a fake breakdown, this for now looks like actual breakdown, and a shift in the structure on the daily time frame has taken place. So it does open up the probability to start looking for downside even in the strongest American indices. Here's a quick look at the Nasdaq. This is currently, I think, possibly the strongest index in the world, and you can see that we are building a flag structure essentially. Currently it's reminding me of this flag structure from 2019. So we've had three drives up, but another fourth drive on lower volume with some kind of a consolidation. But essentially I think this is the key level now for the Nasdaq, this 8900 level. If price breaks down below this, you can expect a deeper correction and a bigger risk off behavior. But until that is proven on this strong index, because what else you have to know is we did have a very strong bearish engulfing candle on the 12th of May, but we have not found follow through. This blue channel is a weekly block. This is the weekly block that made the high on the 19th of Feb. So it's a very significant level, and I think this is the level to watch out for. If the Nasdaq can start to consolidate on it and test it a few times, I think that it is possible that the global market would be reversing. And until then, it is what it is. We have been watching this market and watching it getting weaker, because we from the starting of April we had till mid-April some very strong impulses, and since then we have been finding that whatever bits of rallies we are getting, we are having sell-offs, but the market is yet finding support and still making higher highs and higher lows. So until it is proven otherwise, this is not reflecting the entire breadth of the market, because you can see that the Dow Gold ratio has reflected a complete break in market structure. But until your strength is showing weakness, you should know that the broader market may have some different plans. So keep a lookout for this 8900 level, 8910, 8920, and if the Nasdaq can come and start testing it as support, it is more likely that we build out something like this, and price can come back and down to test at least 83, 8k to 8300. I think there's decent amount of support here, and that would be the next level of interest. But for now, higher highs and higher lows, so put your alerts out for this level right here. So we're looking at the dollar right here, and what I want to show you is that since the market did bottom out, we've had a kind of reverse correlation in the dollar and I've overlaid the SPX chart right here. So you can see that when we did make that impulse once the market had corrected, because I think the market was pricing in the fact that this is a big crash, and the lack of liquidity for emerging markets for the dollar would create demand. So that initial spike is what was pricing in that aspect. But since then we have seen that each time the dollar has been diving, the market is going up. So there's been a very direct correlation, and this inverse correlation has been quite strong. So you can see the dollar is dropping, the market is moving up. So very clean inverse correlation. For now I'm just going to remove this and look at what the dollar has been doing. Essentially made that retrace. We have been tracking this over the last couple of weeks. A couple of very good buy opportunities. We do hope that you've been able to catch these, because we have made a higher high. I mean, essentially it's a base, this is almost like a rounding base, but quite a clean wedge. So we made our first higher low over here, and we broke the high, so we made a higher low and a higher high. All we have to do is, I think, essentially take out this 1.21 level, the high that made this low. I think once the dollar is able to take this, we do have a possibility of coming and at least testing this yearly level, where we did end up getting this rejection. But as I have mentioned again, this is a very high time frame breakout after nearly 20 years, and we just successfully tested a major level, and it's a nice looking structure for me, which has a reflection. It's a potential of continuation right here. So if you have not found your way into longing the dollar, I suggest you start looking for structure in certain pairs which are looking extremely weak against the dollar, and you're able to catch what possibly could be a decent move in this big currency. So looking at gold right here, just looking on the weekly time frame before zooming in and showing you the significance of this level. It's a quarterly level, but you can see that even on the weekly, until we start closing a few weeks close to 1800, I think we need to close a weekly above 1800 for price to really start running on gold. And this 1780 level, it needs to turn into support, because it's essentially only when gold topped out, it was for a little while that this level was support, and then it turned into resistance. We never ended up finding support above this level all the way since breaking down in 2011. So this is a very, very significant level. Let's quickly zoom in here on the 4-hour. Our plan is working out okay. We have been tracking this since an entire month. Personally, this is for me when I did enter to manage risk from these lows right here. We did get another retest of it, so each weekly review we have been tracking this and managing risk from this level. Gold has been looking very strong. The first impulse found good support over here, and we have had a nice consolidation. So it is looking like it is good to be able to break this and turn this into support. I think once it does, it still has a lot of room to run, and gold could be headed towards historic levels if it can turn this 1800 level into the 1780 level into support and close a week above 1800. So essentially that's what we're looking for. For now, gold is just buy and hold, and let's see how far it can continue. So we're looking at this ratio of gold over on silver. Why we're looking at it is because silver is making the headlines over this the last move that it has made. It is outperforming gold currently. So I'm just here to highlight what is potentially a possibility and how long it can outperform gold. So we're looking at these 90 levels on this ratio, so another 10%. But what we've had is again a long consolidation and a big breakout on top of that. So it is possible for this outperformance for silver to continue for possibly another while, but we do have support on this ratio in the low 90s. So this is still potentially possible for some kind of continuation, but you should know that gold has broken out of a high time frame consolidation even against silver, and currently we are just retracing that. So be cautious of that. I mean, I think a bulk of that outperformance move may already be over, but looking at support either in the mid 90s or the low 90s, so there is still in the low time frame possibility for silver to continue to outperform. I think if we come back and break back below 90, then I would say that outperformance would continue. But if this ratio starts to find support around the 90 level, then I would say that after this correction, it is more likely that gold would continue to outperform silver. So just keep a lookout at this ratio. So we're looking at oil, and you can see that the range that we had highlighted, oil has just broken above it, and we are very close to this major resistance levels. And we know that currently demand is back in oil with a few economies reopening. But what I would say is to continue to be able to watch this and to be able to trade this, because it is a very volatile asset right now, and you're able to really get some big moves in oil. So I would say if this continues to act as resistance, to be looking, and if you're looking for the range play, if price can break back below, you can manage risk from the higher structures. And essentially this would happen if the opening of these easing measures are not successful. The demand will lower again, and we would be bound to get another move and another test of possibly even 20 if the market is to not be able to resolve the complications with the virus. And this oil chart has been fantastic to trade, so just keep a lookout for that, guys. We headed to a major resistance, what is possibly major resistance, and I think if the economies are not able to recover, this is a great asset to be able to trade that, because it has the supply demand metrics, and the sentiment has a direct effect on oil. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments, and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!